Welcome, everybody. We should learn that having a really good food lunch attracts students. But I also know that it's because we have a terrific speaker today. So some of you are going to be continuing to kind of walk through and get your food, but we need to get it started. We've got a lot of people online. This is a hybrid event. We are fortunate today. We have with us Meg Rithmire. Many of you, I think, probably know Meg. Many of you are probably in her classes. The title is The Past, Present, and Future of State Business Relations in China, Learning from Comparisons, which sounds like a truly fascinating topic. Meg, just a little bit of background for you. She is the F. Warren McFarlane Associate Professor in the Business, Government, and International Economy Unit over at the Business School. For those of you that know the lingo, that stands for Biggie, that they call it over at the Business School. She had a book, her first book on land bargains and Chinese capitalism, which was on the role of land politics, urban governments and local property rights regimes in the Chinese economic reforms. She has a new book out, which we're happy to publicize today, called The Relationship Between Capital and the State and Globalization in Asia, compares China, Malaysia, and Indonesia from the early 1980s to the present. The book, Precarious Ties, the Business and State in Authoritarian Asia, is the title. And if you hang around all the way to the end, we're gonna lottery off some copies of the book. So I don't know if the formal system has been put in place for you to do that, but okay, yeah, over by the food, there's a thing where you put your name in, and if your name gets drawn, you get a free book. So what more could you ask for? So with that, I'm going to hand it over to Meg. Thank you so much for coming over. We're looking forward to the discussion.
Thanks, John. And thanks all of you for coming. Go ahead and eat, bustle around, do what you need to do. I'm just going to do my thing and you should feed yourself. I appreciate you all coming and showing up on a beautiful day to hear me talk about this. And I just want to express my thanks to the team here for not just this event, but for a lot of things. I've been supported in many ways by folks at the Kennedy School, and especially John and Dan and Larry and team, as I've done some of this research. And so it's a privilege to give my first kind of book talk here. So as you know, is the past, present, and future of state business relations in China, learning from comparisons. So what I promise is to talk about first the present, then the past, and then some of the future, indeed drawing on the research I've done for the book and other work that I've been able to do collaboratively with other scholars. And I promise if you stick around to the end, not only will there be a book raffle, but also a provocation. And so I promise to say something incredibly spicy towards the end. Okay, so what you're looking at here is a caricature of Su Jiayin, who's the chairman or the former chairman or maybe present chairman of Evergrande, a company that almost everyone has heard of if you pay any attention to financial markets or to what's going on in China. It was announced a week ago that Su Jiayin is detained under police surveillance as his real estate empire is, as the caricature shows, collapsing, and has been doing it in pretty slow motion for the last couple of years. Before Evergrande encountered a lot of problems, many of you may know the company donated $100 million to the Harvard Medical School in the middle of the pandemic to help figure out what the solution and what vaccines could be developed. But not only that, he had expatriated a lot of his assets, his personal assets, as well as buying soccer clubs in Europe and all kinds of assets all over the world. It was the most indebted company in China, even at the moment when he made that donation and when he was buying a lot of these luxury kind of leisure assets in Europe. And you might ask yourself, in a regime that is so tightly controlled, right, by President Xi Jinping and by the Chinese Communist Party, which I'll call the CCP, how was such a systemic risk allowed to even develop? How was an individual allowed to expatriate his assets and indeed maybe imperil China to the extent that people are talking about whether the fall of Evergrande is, you see two comparisons here on screen. Is it China's Lehman moment, right? Referring to the beginning of the global financial crisis, which started in the United States in 2008. Or China's Babaru moment, right? The beginning of the popping of the real estate bubble in Japan that led to that country's lost decades at this point. And those are two very different comparisons. I think we've passed the moment of the Lehman crisis, the spiraling, contagious cataclysmic financial crisis in China, but certainly many people now are comparing China to Japan. Is the future of China also another couple of lost decades for the Chinese economy? But it's not the beginning, right? So the detention of Xu Jiayin and the fall of Evergrande, it's not the first large Chinese conglomerate to experience financial problems and indeed legal problems and have its share years. Many people who think about the crackdowns on, in Ling Wei's from the Wall Street Journal, her term, crackdowns on everything, as beginning in 2020, when Jack Ma's Ant Financial Group's IPO was suspended in China in the fall of that year. But actually, things were pretty bad several years before that. So I'm showing you 4 photos of different, very recognizable within China business people who have all experienced detention in the last several years, and indeed really critically between 2015 and 2017. And some have fared better than others. So you see Li Yufei on the top left, she's the chairwoman of the Man Group, a hedge fund in China, who was detained in 2015 during China's stock market crisis. She later said she was meditating on a mountaintop and wasn't in fact detained, although her husband was saying to social media she had been detained by police. And it's still not quite clear officially what happened. Guo Guantang on the bottom right is the chairman of Fosun Group. He remains the chairman, and he also has been experiencing this catch and release pattern where he's frequently detained by authorities and then released to run his company nonetheless. And then the other 2 are a bit different. So Xiao Jianhua, who many of you may recognize as the founder of Tomorrow Group, was a longtime kind of financier to the political elite in China, who was arrested, or really kidnapped, although the use of that term is interesting, but he was stolen really out of his Four Seasons hotel in Hong Kong, where he had fled and spent several years before actually mainland authorities repatriated him to Beijing, and took about 5 years until he was finally sentenced in the summer of 2022 for all sorts of financial crimes. And the guy on the bottom left is certainly recognizable, Guo Wengui, Steve Bannon's good friend, who is now, I think, in custody in the United States. But before he was doing that, he was in exile in New York in a penthouse where he was singing like a bird, recording 2 videos on all of the salacious corruption allegations he could possibly lodge against party state elites in China. So the point is that this relationship has been conflictual for some period of time, and understanding not only why the CCP seems to have turned against these business elites, but also what explains why some of them get to run their companies and others seem to be in prison, whether it's in the United States or in China. So the theoretical motivation of the book that I indeed just published, Precarious Ties, is really twofold. So the first question, how do authoritarian regimes discipline business elites? I'm not the first to ask this question. So almost all countries that are developing, that are authoritarian, right, have some mix of state and private capitalists, right, which they want to run their economy. And it's a dilemma because authoritarian regimes want capitalists to generate innovation and to invest and generate economic growth, but don't want them to grow so powerful that they become a threat to the regime itself. A long social science history has looked to precisely these kinds of capitalist business elites as the precursor or the movement, right, for democracy. So that's encapsulated in Barrington Moore's very famous quote, "No bourgeoisie, no democracy." And he was really describing the path of many Western countries rather than prescribing this role for capitalists. But nonetheless, the research in the last several decades on authoritarian regime has really ascribed a different role to these capitalists, which is that they are the ones who buttress the regime's power. They're co-opted, they're cronies, they help political elites get resources and use those resources, and they are in fact reasons for authoritarian resilience rather than kind of precursors to some sort of democratic change or authoritarian demise. The second question is, can authoritarian regimes have financial systems that allocate resources efficiently? And I'll spend a lot of time on that particular question today. It's of a special importance right now, right, as we think about Hong Kong's transition from a relatively liberal financial capital to something altogether different, and also a profound question on China in terms of how can it escape the middle income trap. It might have to have functioning financial markets to do that, and will those financial markets work in the context of authoritarian regimes? The empirical questions, which probably interest most of you more, are big ones, right? So one is the question that everyone seems to ask and answer, which is how did China grow during the first 35 years of why indeed did the CCP turn on its capitalists really in 2015 and since then? And lastly, how useful are these comparisons for understanding China's economic future? So I'm going to go back to the 40s, but I promise I'll bring you up to date. And again, I promise some provocation in terms of what the right comparison might be for China, whether it's Japan, Malaysia, or Indonesia, as I articulate in the book, or something altogether different from that. So I want to start in the past with an image of Rong Yiren. So those of you who are Chinese or know the Chinese economy know who this person is. He's the paradigmatic red capitalist, as he's been described, including by Zhang Dejiang, who's a major CCP elite, right, in 2016 on the anniversary of Rong Yiren's birth, right, who said, Comrade Rong was one of modern China's leading businessmen, an outstanding national leader, a mighty patriot, and a soldier of communism. Doesn't make a lot of sense, right? All of these descriptors put together. Rong Yiren was born to a Shanghai elite family in the early 20th century, a cotton and textile family. Many of China's business elites from Shanghai and other cities fled China on the eve of the revolution or immediately after in 1949. But those who stayed played a delicate role of dancing between their own personal interests of trying to ensure their safety in communist China and trying to use their skills, right, in order to ensure their safety to help build modern China and rehabilitate the economy. And so in many ways, and it kind of typifies this, right? He helped planners in Shanghai understand how businesses are run. He was one of the few people who knew how to read a balance sheet and understand, right, what companies were supposed to do, the Maoist guerrilla. And he wasn't alone, right? And so then, you know, maybe predictably, during the Cultural Revolution, he was sent to work as a janitor, then rehabilitated in the Deng era and allowed to found CITIC, right? One of China's major state firms and indeed its global vehicle for investment and attracting funds to China. And he died with a state funeral and all of these things. So that's a bit unusual, but you can identify many of these figures in China who have kind of weathered the ups and downs of Chinese politics and revolution, campaigns, radicalism, and then the reform era. The argument that I make in the book is that this history of relationships between capitalism and capitalists and the party, which have always been there, has had a profound impact on how contemporary capitalists in China think about their vulnerability and try to pursue their safety within China. So here's another example. Certainly you all recognize this to be Jack Ma. These are words I won't read to you. He uttered them in 2018. And I think he probably doesn't feel this way right now, that it's a clean and honest government. Why would he say such a thing? And there were so many revelations, right? Oh, he's a party member, and everyone was so surprised by this. Why would he join the party, even though he's obviously deeply capitalist and might rather have a regime that's governed with protecting property rights? Because he knows what's good for him, right? He knows what to say to make himself safe. He knows what to repeat. He knows what relationships to form to make himself safe within a very unpredictable communist regime that is kind of characterized by policy changes that are unpredictable, quite radical, and can be incredibly punitive. In the book, I call this set of practices adept dissimulation. I didn't make up this term. It comes from a scholar of the 1950s in China. There was a whole literature, many of you have read it, on how people, quote, got along and got ahead in Mao's China. And the key thing to understand about how China works is that the political campaign is the primary mode of politics in China. You may think you know what a campaign is, and many of you do. You've lived through some of them. Zero COVID was a campaign. The Belt and Road is a campaign. Made in China 2025 is a campaign. The one-child policy is a campaign. So was socialization. So was the Great Leap Forward. The Cultural Revolution was a series of campaigns. I'll show you a whole table on campaigns in just a moment. And campaigns are a unique technology to China. They're mobilizational. They come with propaganda. The propaganda does not serve to brainwash people, but rather to signal where resources should go all the way through the party hierarchy. And also signal on the ground how they should behave, what they should repeat, how they should frame their actions as being part of the goals of the party state rather than their own individual pursuits. They're characterized, and have been since the 1950s, in waves of assault, right? Waves of excessive implementation, or what some people call overcompliance with campaigns. And then moments of rectification, so fear that resources have been misspent or radicalism has gone too far, and then a kind of rinse and repeat cycle as this happens over and over again. Campaigns are quite an incredible way to achieve some policy goals in China, particularly transformative ones, right, that require overriding institutional and bureaucratic systems. And in many ways, most scholarship on China locates the importance of the campaigns and Mao's radicalism and his hostility to the kind of institutional bureaucratization that characterized the Soviet Union. So while communism in the Soviet Union was sclerotic and stuck and incapable of solving problems and responding to things, a campaign-driven politics in communist China, which comes from the Yan'an period, it comes from Maoist guerrilla behavior, all of that was much at circumventing bureaucratism and achieving transformational goals. So I often like to ask audiences, did the one-child policy work? Yes. Depends on if your objective function is to make people have one child and reduce the population, it worked. Maybe, right? Did zero COVID work? In some ways, people didn't leave their homes, right? People obeyed lockdowns. Did it work too much? Maybe. Did Made in China 2025 work? Well, it's not 2025 yet. It's too early to tell. But certainly these campaigns are capable of mobilizing resources, of galvanizing people to participate in the state's goals, but they frequently come with overcompliance and radicalism that then becomes a threat to the policy goals themselves and certainly to individuals on the ground in China. These cycles of campaigns, right, as well as the party state's unique objectives, which indeed were revolution in the 1940s and 1950s and even 1960s. They were very revolutionary, but they also were pragmatic in the sense that Mao Zedong and leaders in China saw the need to rehabilitate the economy, generate industrialization, and they needed partners to do that. So the book is very archival in the first several sections and goes through the ways in which in different cities like Tianjin, like Shanghai, like Chongqing, businesses, right, were subjected to these cycles of accommodation and reprisal, right? We need your skills, we need your investment, and then targeted during the anti-rightist campaign or during the Cultural Revolution, right? And these few decades of the Maoist period really left a huge impact, right, psychologically on people in that era. If you haven't encountered that personally, it's not difficult to do so when you talk to people from that generation in China. But they didn't end, right? They didn't end with the Maoist period. And I promised you a table on the campaigns. I don't know if that's readable to you, but many people think, the Maoist campaigns, I was surprised to read in the New York Times, the newspaper I love, the New York Times, right? So there was a big article when China started its zero COVID campaign, China's reverting to Maoist era campaigns. Campaigns never left China, right? They've been there throughout the Deng era, the Zhang era, the Hu era, and indeed the Xi Jinping era, where campaigns have become much more mobilizational and much more politicized than ever before. So here are some just basic examples, and I've cited some of them, right? Combating SARS, the campaign to go out, regional revitalization campaigns. They come with resources, they come with things to repeat in propaganda, and everyone sort of knows exactly how to wear the red hat, as it's called in China, to couch, right, their objectives in the language of the campaign to get those resources and protect themselves, at least as long as the cycle hits its acceleration point and then starts to decelerate. So what does this mean in terms of the behaviors of capitalists in China? So you see here that in the research, I find institutional as well as firm level, as well as private, right, unobservable ways in which these capitalists who are kind of habituated to deal with these cycles of accommodation and reprisal have adapted their behavior to remain safe in China. So at the institutional level, they join the CCP. This should not always be read as some sort of commitment to socialism or socialist ideology, but rather a way to get closer to power, to understand the information that's coming, what campaign is coming next, what's the radicalism going to look like, right? They run for office and hold formal positions. So many people have done work in China's political economy to look at how they sycophantically repeat, right, the ways in which the party state states its propaganda when they run for office, or even in company manifestos and company annual reports and things like that. At the firm level, Many firms have disguised their firm type. That's actually what is meant by wearing the red hat. So the town and village enterprises in the 1980s, Yao Shanghuang's work has uncovered that many of them were in fact private, but they were pretending to be public to keep themselves safe. They hide their ownership through layers of obfuscation. I'll get back to that one. They parrot the official language, and they expatriate their assets. And so in the 1980s, everyone was wearing the red hat as a town and village collective. And then in the 1990s, suddenly everyone was a foreign invested enterprise because those were the companies that were getting tax breaks. They were getting all of these advantages. And what they were actually doing, as I show in one of the chapters, is round tripping their capital out of China and back in China to achieve those objectives. The short time horizons I'll come back with as well, but it's relatively intuitive. If you think that these campaign cycles have a several year kind of horizon, then you are making your investment choices, making the choices in terms of how your firm is trying to do in order to ride that wave, get the resources, get the safety, but prepare yourself for exit when the campaign turns to something different. On the private side, what people and what I call in the book mutual endangerment, and I'll say more about that, which is kind of mutually impressing people into corrupt acts and illegal acts in order to hold one another hostage, right? So there are these great, observations from field work of others, but also in the book about, if you get an official to do something good for you, that's worth $100, but if you get them to do something bad with you, it's worth 1,000, right? And so we see this kind of culture of vice in China, the ways in which these secretive corporate stakes are hidden from everyone. So there's many of you know in state business relations, there's a cottage industry of people trying to figure out how much are your business ties worth, right? If you have this person on your board, and for example, that person falls from grace politically, then how much does your company valuation go down? That's very difficult to do in China because very rarely are the politicians' corporate stakes visible, right, to the general public, which is why Jane's colleague, Dave Barboza, had to win a Pulitzer for figuring out how much Wen Jiabao was worth in 2012, because it took years of painstaking tracing of corporate records to figure out, in fact, which Wang Wei is that? Is that Wang Wei the brother-in-law of someone famous, or is it a different Wang Wei, right? And so all of this is obfuscated in a way that protects entrepreneurs because they have these important allies, not just to give them resources, right, but to make them immune from state prosecution and protect them behind the scenes. And then we also see, and I'll spend more time on this, the accumulation of personal wealth, sometimes at the expense of the health of the firm. And I call this in the book looting, following work in economics, and I'll say more about this. But we observe this really interesting trend in China through which companies, perhaps like Xu Jiayan's Evergrande, have enriched the principals and indeed kind of bankrupted the firms themselves. And so this topsy-turvy world of present value is more important than long-term value of the firm is, in my view, a manifestation of the fundamental vulnerability of capitalists within this particular political regime. All right, so that's the past and the present. So what the book does is describe the evolution of state business relations in China over the last 70 years within the context of a comparison. And I'll say more about the comparison at the end. And in the book, I talk about what my argument is that China has gone from a system of basically mutual alignment. So the alignment of interest and formal state political elites and business elites outside the state to pursue economic growth. And then really in the early 2000s shifted to a model which I call mutual endangerment, where instead of pursuing basically mutualistic growth that's pretty good for society, although with corruption and resource distortion and misallocation, what we get is a form of Chinese capitalism that is fundamentally debt-driven, short-term, fundamentally driven by investment, unproductive, and systemically risky. And so that's the process I'd like to describe. So in the kind of early 1980s through the mid 2000s, what we have is a fusion of interests. The primary goal of everyone was generating economic activity and self-enrichment. There were a couple of China that made this alignment of interests possible. And part of the argument that I have in the book is that people have focused too much on one and not enough on the other. So the cadre evaluation and the ways in which cadres have been evaluated has been the primary focus of scholarship in Chinese political economy. So how has China been able to do things? They have a meritocratic regime. They evaluate leaders all the way through the hierarchy for generating economic growth. And that's why China's been able to grow while, say, Zimbabwe has not, right? Not all authoritarian regimes are as good at this, but ones that have, KPIs basically do really well. So the argument that I make in the book is that this is basically overstated, right? It made sense that the KPIs would work, especially if they were about economic growth, because that meant that local officials could enrich themselves at the same time, right? Everyone's sort of taking a cut. But not only that, but you could have a system in which, and I argue the system does become this, in which everyone's incentivized to generate investment, but no one's guaranteeing that that investment is competitive or productive, right? Just because you're friends with a politician and that politician wants you to invest in their district, what's to ensure that those investments are competitive, especially in an authoritarian regime where there's not a lot of market discipline? So the fiscal policies and the financial policies are the answer to this puzzle, is what I argue. That basically, ironically, and the conventional wisdom, which I'll show you here, is that entrepreneurs were excluded from China's financial system for the first 2 decades of reform. The conventional wisdom is that impeded economic growth. Had entrepreneurs and private business people, rather than just state-owned firms, been able to access banks and lending in China, we would have seen a lot more growth. And my argument actually is that the exclusion of the financial sector, of the private sector from the financial sector, actually generated hard budget constraints because they could only invest based on retained earnings, which meant they had to earn something, which meant they had to be productive. And to boot, the fiscal policies, which were tax sharing between the local governments and the central government. So local governments basically retained the taxes they generated in their jurisdiction, which meant that you wanted productive businesses to be generating taxes. And so everyone did pretty well for a period of time. So let me just show you briefly a little bit about this comparison before I go in more detail. So I argue that mutual alignment is kind of informal practices organized to serve the productive interests of business. And this is what characterizes China in the first 2 decades of reform. And in biological terms, I argue that it's mutualistic. So society gets some economic development, even if there are distortions, but it's not it's fundamentally good pretty much for everyone, right? But it has a pathology, and its pathology is what Eva Bellin has called the developmental paradox of the authoritarian state, which is you give resources to these different kinds of enterprises, you want them to grow, but then they get stuck in a certain stage of development, and it happens in other parts of the comparison in the book. And then you get the authoritarian state basically wants to override the old winners to create new winners who are going to do something even more innovative. Mutual endangerment is different, right? It's economic and political elites that are mutually entwined in corrupt dealings and interested in perpetuating each other's survival, primarily because they fear mutual losses, right? And this is competitive with society, right? Elites are basically competing for resources with society rather than generating resources that are good for society. And its pathology is that it's inherently politically and economically unstable in ways that I will show. And I'll show exactly what I mean by this in terms of the manifestations. So I outline 3 manifestations in the book, which are asset expatriation, weaponized information, and indeed looting. So I'm a political scientist, not an economist, so I have to have a 2x2 in a book or it doesn't work. So here's my 2x2 and you'll see it in a little bit. So what are the variables that determine whether you get mutual alignment or mutual endangerment? And the argument that I make is that it's relations between political and business elites on the one hand and the financial sector on the other, which is why I'm talking about campaigns and talking about the financial sector. And so whether they trust one another fundamentally, and I argue predictably at this point that Chinese business elites and political elites do not trust one another, even if they appear to, and financial control. So is the financial sector disciplined or is it partially liberalized? And very rarely do authoritarian regimes have fully liberalized financial systems, and I'll talk about that too. So the last point I want to make before I go into the financial sector in more detail is that what's interesting about mutual alignment and mutual endangerment is they both appear the same when you look at formal institutions. So party members, our business elites are part of the party, looks like co-optation, right? Looks great, looks like they're mutually aligned. But when you're close with someone with distrust, it means a lot. It means you behave in a different way as a firm and as an entrepreneur than if you are close with someone with trust, right? And we'll see lots of evidence of that. So I focus on financial control because it's not the only, but it is the primary site, right, of interaction between political and business elites in authoritarian regimes. And the fact is that authoritarian regimes almost never have truly regulated by rule of law, because rule of law is relatively incompatible, right, with the one-party rule or an authoritarian regime that doesn't have competitive politics. Nor do they have truly marketized financial systems. And we can think of a lot of reasons why this is. You can think of your own examples and your own knowledge, right? And a lot of it is because fundamentally they're protecting their own political elites because they want to protect their monopoly on political power, which means that it's hard to be subject to either the rule of law or the rule of markets, right, in order to protect yourselves. But many of them have financial systems, and some of those financial systems are disastrous and don't allocate resources well and go nowhere, whereas some have financial systems that do. So the puzzle is really, where does the discipline come from? And the argument that I make in the book is that you have to have organizational discipline and monitoring to have an effective authoritarian financial system. When I say effective, I don't mean efficient in the sense that it's the most efficient financial system. I mean, it's good for the regime, right? So you want to have the authoritarian regimes want to have financial systems that allocate resources how they want resources allocated. If that's to their cronies, then they better ensure they do that. If it's to innovation and productive resources, they better ensure that they do that, right? And so my exploration is why, right, this kind of fell apart over time in China. So in mutual alignment era, there was this informal arrangement between pretty small scale capitalists in China in the 80s and 90s and lower levels of the Chinese state, right? And the financial discipline came from the exclusion of the private sector and political hierarchies. And the fiscal discipline came from this tax sharing arrangement. So, I mean, I provide a lot of evidence of this in the book, but there's overwhelming evidence, right, based on what we know on corporate records and from survey data, that entrepreneurs in China from the 1980s through the 1990s funded their endeavors either through foreign direct investment, which my colleagues would say is very efficient for the most part. They know who to invest in. They know how to identify competitive firms, and also from retained earnings or very close interaction from friends and family, meaning you couldn't get a bank loan that you never expected to repay and then invest willy-nilly in whatever you wanted, which is indeed, I think, what happens later in the era in China. So this table just shows you that the primary sources of startup capital, and I have the same data on kind of cash flow and reinvestment capital, comes from accumulated savings or loans from relatives and friends. The breakdown happens, unfortunately, for the social scientists in the room, there's no exogenous shock that I can identify, right? Although there's a little bit of one. But the discipline over time from the late 90s to the early 2000s attenuates in both the financial and the fiscal system. In the fiscal system, we see the rise of land finance and the re-centralization of fiscal revenue. So this is a graph that appears in my second book, was also in my first book, which was on political economy of real estate in many ways, selling more now than it did 8 years ago, go figure. But so what you have here is this line here, the central share of total revenues, which you see early in the reform era, right, went down significantly, meaning that local governments in China enjoyed the tax revenue that they actually generated. And they were responsible for expenditure, right? So those are kind of an alignment of incentives, right? If you are responsible for spending on health, education, infrastructure, et cetera, but you also get to fund that from the business activity in your district, right? All these good things seem to go together. But in 1994, for various reasons, there was a re-centralization of taxes in China, and the central state got almost all of the taxes, whereas local governments were, as you see, nonetheless left with the expenditure burden for almost everything that happens in local areas. Unemployment, all social services, public services, infrastructure, almost everything is the responsibility of local governments who no longer have tax revenue. So what do they do, right, to fill this gap, this significant gap between local budget balances and central balances? You pretty much all know this story. They depend on land, right? So the one thing they get in 1994 when they lose the taxes is they get the right to lease land for upfront for large-scale revenues, right? Which generates this pattern of urbanization and land-hungry local governments in China that I've written about, others of you have written about, and we all pretty much know about at this point. What's interesting about this, and this is just a picture of a development zone outside the city of Harbin in China, is I was talking to local officials, this was in 2012, and I said, oh, is this, you know, what did you want to do with this local area? You know, what's your goal here? Is your goal to generate taxes? Is your goal to generate economic activity so you can get promoted? And he's like, promoted? Why would I want to get promoted? I'd like to sit here, get a cut of all the business that goes through. I don't want to go up a single level, right? And so this focus on the KPIs, right, only works if people think they have a reasonable path to promotion, and if those KPIs are also aligned with their personal incentives, right? Which is why the party state has had a hard time enforcing other KPIs other than economic growth, like pollution control, right, like affordable housing, right? All of these things are much more difficult because you only want to do that if you really want to get promoted. This guy that I spoke to wanted to sit on his development zone land, take a cut of everything that came through and get zero attention from above as he personally enriched himself. And sadly, he's not alone. A lot of officials in China were kind of operating with the same mentality, right, over the 2000s. But it's not just the fiscal system alone, right? Why else could they do that, right? Partly because the financial system was becoming liberalized in a way that did allow private entrepreneurs, especially those with connections, to access the financial system, meaning banks and eventually stock market listings, right? And so you see this process in the book. It talks a lot about the development of the financial system in China and the expansion, and indeed, some have used the word democratization of the financial system. So the massive entry of private banks, of local commercial banks, of non-bank financial institutions, aka shadow banking, which happens, hugely in China. Many of you are aware of those particular institutions. And the irony is that you get access to the financial system without appropriate regulation, and maybe that's predictable, but not even competitive interest rates, right? So there are not enough ways for financial institutions to ascertain risk. And so they lend to people that they know, right? And then that means people who have access to the state, whether at the local level or the central level, have access to a financial system that is really quite a mess in China. And so over this period, they developed the kind of, it's called one bank, three agency system. So the People's Bank of China, and then regulatory agencies for insurance, for securities, and for banking, none of whom talk to one another. And so I find this pattern where these companies are getting licenses in insurance and securities and banking and trading with one another and kind of arbitraging the system in order to shift assets around and get as much capital from the system as they possibly could. What people don't know is the massive expansion of, when we think about debt in China, we typically think about state-owned enterprises and local governments, right? But the private sector, like the hard-nosed private sector that should be subject to extraordinary debt in China. Evergrande is just an example of that. Net domestic credit in the gray and in the black is to the private sector, the non-state sector in China. It's really the private companies that are borrowing so much money from Chinese banks, especially after the late 90s and early 2000s. And so instead of this kind of symbiotic, right, mutualistic growth, what you get is investment-driven growth, right? And when you think about how GDP works, I do teach banking. When you think about how GDP works, right, if you bump just investment, you can bump GDP quite significantly. And that's exactly what a lot of officials were doing in China. And if you just want investment to bump GDP, I would go around saying, well, what's the plan for 5 or 10 years? I'll be out of this position in 5 or 10 years, or I don't really care. I just want to get the investment numbers up. And then there's all these kind of institutions within the bank where there's what's called an introductory person, a jieshaoren, for every loan you get from the bank, and that person takes a cut of what the bank is lending you. So everyone has these incentives to make the loans as big as possible. Meanwhile, interest rates are capped, deposit rates are even lower than interest rates, and China has a huge savings pool. And so everyone's partying with a lot of the money in the financial system, and there's almost no discipline left, right? So we get this massive expansion of public and private debt. We also get firms with incredibly complex governance structures. I realize based on the room, this is basically going to be unreadable, but it's in the table, and a longer version is in the book, which is some of the most famous companies in China. HNA, has anyone heard of HNA? Dalian Wanda, Tomorrow Group, Anbang, Wanxiang. Some of these are now defunct for perhaps good reason. But so I spent a lot of time replicating some of David Barbossa's work, right, but with other firms, which is looking through these corporate filings to figure out how many subsidiaries they own at how many levels, right? It's painstaking work because they obfuscate it. And I had to use bond prospectuses, which are mentioning all of these firms and subsidiaries that aren't available in the formal corporate filings, then looking into those. We also look at ICIJ, so the Panama Papers appearances for some of these firms to figure out how many times are they registering in tax havens and expatriating their assets. But what I found was a remarkable set of firm structures, right? So you have these companies that have some of them thousands of subsidiaries, half of which are hidden subsidiaries, at levels that are astonishing, just from a corporate governance perspective. So 10, 12 layers of governance you have to trace before you get to the beneficiary owner. And almost all of these large companies have inexplicably financial firms that they're tied to, right? So securities firms or insurance firms to get licenses so that they can borrow direct themselves and shift their assets around. And so in corporate governance terms, a lot of tunneling, for those of you who are familiar with that, whereby they kind of list some firms and then raise capital and then tunnel those assets back to another balance sheet. I saw firms that were then inflating that balance sheet to borrow from another bank and immediately moving those assets to a different subsidiary to do the same thing, right? So this massive rise in debt, and this is this other part, which is I chronicled all the ways in which China's top private firms, large firms, engaged in looting, right? Looting their own assets, and I'll say more about that. And so this is a combination, I argue, between fundamental distrust and financial liberalization. So when you have a private sector that feels unsafe and that feels vulnerable and thinks in short time horizons, and they have access to a financial sector that is neither marketized nor regulated, you can get pretty bad behaviors, right? So I'm quoting here from Desmond Shum, who may be known to many of you, who is, a pretty famous business person in exile. He wrote this book, Red Roulette. Is that what it's called? Red Roulette? Yeah, I think so. Anyway, he says, I came to believe that in China, I have a dozen quotes that are similar to this. I came to believe in China that a long-term business model wouldn't work. I began to understand what some of my entrepreneur friends have been telling me all along. The smart way to do business in China was to build something, sell it, take money off the table, and go. If you invest $1 and you make 10, you take out 7, reinvest 3. But if you keep 10 in, chances are you lose it all, right? This is not Desmond Shum on the right. This is Xiao Jianhua, whose rise and fall epitomize exactly this kind of mutual endangerment, who knew everyone, he was friends with everyone. His banking assets, right? He used kind of obscure licenses in Inner Mongolia to acquire a bunch of different securities licenses, bank licenses, real estate firms, all of these things, shuffling things around with one another. And then really interestingly, for mutual endangerment as a manifestation, he gets tipped off by someone, right, that the party states after him. He goes to Hong Kong. Why would it take, oh so powerful Xi Jinping 5 years to get him sentenced, right? Why didn't they even announce charges? My view is that they had to neutralize the people, right, that would have protected him and make sure that he didn't know anything else that was going to imperil people who were still in power before they. Guo Wengui is similar, right? So my most interesting conversation about Guo Wengui in China was someone said, look, half of what he says is false and half of what he says is true. And the stuff that he says that's false is often true, just not about the people he's saying it about. But what he's really doing is saying, I know a lot of things and I'm threatening to connect the dots. And almost anyone in his position could do that, right? Which is why some of these people get catch and release because their patrons are still in power or they still hold information about people, and some of them do not. So as I said, the manifestations are asset expatriation, weaponized information, and looting. I'm going to go through these really quickly, and then I'll provoke you with some comparisons. So this is my favorite graph to show about China's external balances. So this is China's balance of payments over the last 20 years. And everyone's obsessed with the Belt and Road. I've been there. I've been obsessed with the Belt and Road. For the most interesting thing here is, in fact, the errors and omissions number, which is the very light gray. And this is outward direct investment, which is the darker gray. What are errors and omissions? That's money leaving China in suitcases or through casinos in Macau, coming into real estate, outbidding me in cash for apartments in Cambridge, right? But all of this is money that's leaving China basically illegally. And it's equal to or more than official foreign direct investment from China, even during the height of the Belt and Road. So for every dollar that was going out of China to invest in construction, right, or bridges in Africa or Southeast Asia or Europe, $1 was going out by a threatened entrepreneur, right, who was trying to get his assets out of China as fast as possible. And where did those assets go? This is foreign direct investment. Our intuition, we think it all went to developing countries with weak institutions. No, it went to Europe and the United States. That's the biggest chunk, Europe and the United States, right? Especially after Xi Jinping's anti-corruption campaign, when people thought, I better get my money out now while there's still time to do that. Desmond Shum was maybe one of those people. All right. So mutual endangerment in China, we also have weaponized information. I've already explained why my hypothesis, which is, by the way, completely unfalsifiable because I have no inside information about who Guo Guanchang knows and doesn't know, right? And Li Yifei, right? But why are some people treated differently? Why do some empires fall and others do not? It has to do with their web of influence. And the one thing about weaponized information that's also so interesting to me is that this cottage industry I described of figuring out who controls what firm and what the firm is worth when their political patron falls. We've seen these papers in Indonesia. We've seen them in Mubarak's Egypt, right, over and over again. The interesting thing you discover when you look at who's given corporate shares and who is friends with what business group is that most of these business groups have friends in all the factions. It's everyone. They don't want a single patron to give them resources. They want to protect themselves by being friends with everyone at the top, which makes it particularly difficult to unravel and untangle, even in an anti-corruption campaign. And lastly, looting. So I'm showing two pictures here. One is Luckin Coffee. Has anyone heard of Luckin Coffee? Well, everyone who's been to China in the last 20 years has. Or 5 years, right? Well, Luckin Coffee appeared kind of out of nowhere as a rival to Starbucks in China, appeared absolutely everywhere. IPOs sets a record for the quickest IPO ever, right, on the New York Stock Exchange. The whole time, the founders who had pledged a lot of their shares for immediate dollar or euro denominated loans, right, started to cash out and move out of China. A US investment firm says, we've done some satellite imagery. There's no way that their revenue statements are correct, right? And then basically they bottom out, they have to delist, all of this stuff happens, right? Now they've reinvented themselves. And in fact, their propaganda is, we stuck it to foreign shareholders and now we're back, So in any case, Luckin Coffee is still around. But what's interesting is the founders of Luckin Coffee had done the same thing before. They did it in the rental car business. They did it in a bunch of different businesses, right? And my argument is not that all entrepreneurs in China are corrupt and engaging in fraud and malfeasance, but there's enough of them, right, that it seems like a pervasive set of business practices in China. And in the most provocative chapter of the book, I describe what I call mafia systems, mafia business systems, which is also a paper in China Quarterly co-authored with my friend and colleague Hao Chen, where we document the ways in which you can actually think of these things as organized financial crime rather than organized efficient production and consumption, right? They're designed to prey on others and obfuscate. And the moral economy that goes into this is quite significant. So you get employees in these businesses, right, saying, what was the point of me trying to do my job well? Someone was just going to prey on me, so I preyed on somebody else. And that's in fact how mafias work. If you've read about them at all, which you have, because everyone's interested in those firms. H&A was a similar kind of firm, right? It's not, and the mafia systems don't always have violence, but sometimes it's there, or just accidents, or the coercive violence of the state, right? But H&A, basically a pyramid scheme company where they were borrowing from state banks, inflating their assets, expatriating them through philanthropic organizations in the United States and elsewhere, right? And so we see it in quite a bit of firms in China, including, I think, Evergrande, right? So Su Jiayan's personal fortune was expatriated, right? They had almost 3,000 subsidiaries, right, with huge levels of corporate obfuscation, irrational-looking international expansion and diversification, the assumption of excessive risk. And within Evergrande, as was revealed in 2021, 2022, they were pressing their own employees into lending the company to keep it afloat, right? If that's not a mafia system, it's hard to tell what is. All right, some conclusions and then some provocations. So state-business relations in authoritarian regime, my argument is, are inherently unstable. As soon as we call some groups co-opted, we fail to understand the nature of the relationship and the way in which it can move over time, right? And mutual alignment, I argue, causes stagnation, right? You get a stagnation when you get this, you get economic growth, but it's not going to be catalytic and it's not going to be sustained over time. Whereas mutual endangerment causes drama. And that's what we see in contemporary state-business relations in China, drama. And it's not unique to China. I'll say more about that. So what we've observed in China really since 2016, 2017 is a move back to mutual alignment through financial discipline that doesn't come from financial exclusion. It comes from corporate governance participation on the part of the party state itself. And so I have other papers, I've done other research on the rise of corporate shareholding in China, not just because the state wants to finance, science and tech companies that are doing security-driven economic growth, but they want to monitor what firms are doing in China. They want to have access to their balance sheet and their boardroom, not because control them, but they want to prevent them from behaving in a way that endangers the state itself. So they might be back to mutual alignment. If I'm right, they're back to stagnation. Comparisons. So the book is based on a comparison between China, Malaysia, and Indonesia. What I conclude in the book, right, and here you see my 2x2 with the cases filled out, is that Malaysian entrepreneurs and the state basically trust one another. For a variety of historical reasons, which I don't have time to talk about today. Whereas in Indonesia, the Chinese capitalists definitely did not trust Suharto, even though they claimed to be beautiful friends. They did not trust him because he stoked violence in order to remind them that they depended on him for physical well-being, right? And he depended on them for economic investment. It was a relationship of convenience that was driven by fear of exclusion, which is why the capital account in Indonesia was always open and it was always busy, because Chinese entrepreneurs were parking their money in Singapore and in Hong Kong throughout the duration of the new order in Indonesia. Malaysia is a bit of a different story. The kernel of the book, I will tell you, came from really sitting in Shanghai and in Hong Kong and Shenzhen in 2015 during the financial market crisis, as I was also learning about Indonesia, thinking I was going to write a different book. And I was sitting with a financial market participant who was sweating as he was watching his whole, the markets crash. And I said, if you need to be excused, it's fine. If you have business to do, he had like 5 phones laid out. You've all seen people like this. And he said, no, it's fine. This is just play money. I don't really care, right? But he was losing hundreds of thousands of renminbi a minute, right, in this market crash. And I asked myself, is China like Malaysia, which is the government has a tight control over the corporate sector, but they're going to be stagnant for generations? Or is it like Indonesia, one financial crisis away from absolute decimation, right? And I have books on my shelf in my office published in 1996 and 97, saying Suharto is stronger than ever, right? And so, asking yourself how unstable this is. And so that was really the germ of inquiry for me. And I conclude that China is much more like Indonesia, right? Except for that Xi Jinping and the CCP have much more at their disposal to reverse the mutual endangerment back into mutual alignment than Suharto and the New Order ever had, especially under the watchful eye of the IMF, as Suharto is sort of signing over his future here during the financial crisis. Japan, right? So everyone's interested. So my argument for comparing China, even though it's difficult to do, right, is that we tend to think of China as exceptional in every possible way. And it is exceptional in a lot of ways, right? But there are things that are similar. And by exploring this relationship of trust and comparing financial regimes across across countries, it gave me much more insight, right, into the nature of things in China. But now we're all worried that China is Japan. And let me tell you why it is and why it isn't. And so what's similar about China and Japan? You have here some of the things on the left, the things that are bolded are similar. They have fiscal problems and clearly debt. This looks a lot like a balance sheet recession in terms of what's happening in China. There are financial problems of what's happening in China, including moral hazard, right? Lack of rule of law, right? The command and control financial system. Japan did not have all of these issues, right? What's real is the social structure issues, right? The demography challenges in China. And I think China is also suffering from political problems, right? The feedback mechanisms within Chinese society on getting political decisions right have attenuated under Xi Jinping. And in Japan, that wasn't necessarily the case. But why is China different? Why is Japan not quite right, in terms of an analogy? My argument is because China is at a lower level of development than Japan was when it experienced its collapse and its stagnation, right? And much lower level of development, right? Still a middle income country with a lot of in China. And that combined with Japan was a US ally. It knew it would have access to global resources, that it needed to have a functioning society, including oil and gas, including high technology, right? And so the crisis for Japan was weatherable, or has been weatherable in that particular way. But the combination of the fact that China still has people who aim for a better life, a much better life, and China's external environment is unfavorable, means that China will not, the CCP will not accept decades of stagnation because it's an existential threat to the regime, right? And so if you say the future, US policymakers want to say the future of China is Japan, we don't have to worry about it anymore. No, existential threat for them. They must figure out either how to domestically innovate and grow, or they must figure out other ways to get international resources, which could be quite difficult for the international system if they're convinced that they can't do it through trading and developing alone. And here is my provocation. Let me show you this first. So here are 2 quotes. I'll read them since they're probably illegible. So although entrepreneurs had independence on investing, decisions about products, research and development, and other fields of company management, the state set strict limits regulating prices and distribution and influencing and often ordering investment decisions. Important goals of the state bureaucracy were realized by state-owned companies and the compulsory cooperation between state-owned and private firms. The second one was, this economic system is, quote, a system in which the state's needs and goals were not threatened by unregulated markets and selfish capitalists. These are not describing China. This is Yvonne Barron and Sherry Berman describing interwar Europe, fascist Italy and Germany, where, and I'm bringing for show and tell a little book that my co-authors Kelly Tai, Margaret Pearson, and I also published this year on the Chinese development model, where we call it party-state capitalism, right? It's not state capitalism, but it's party-state capitalism. What's the difference? The imperative is security orientation, the needs and survival of the state rather than just economic growth. It's about discipline. My view is that Xi is not actually an ideologue. He only cares about who controls the means of production, not who owns the means of production, which was very similar and exactly what the interwar fascist regime said. There's blurred boundaries between the CCP and private firms and this challenge to economic interdependence. My argument is not that China is fascist. That's a historical category rather than a kind of contemporary category or something we can compare across time. But it's worth considering, right, what the consequences, right, of a primacy of politics, that's Sherry Berman's term, right, putting politics before economics, what that means for China. Because historically, regimes that have been founded on the primacy of politics and state survival above all else, that are also convinced they can't access external resources and are existentially threatened in the pursuit of growth, have become quite aggressive. That's it. Thank you. Absolutely. It's a lot of stuff. Okay. It's all resolved. Andrew?
There are buttons in front of you on the push the green and sort of green.
So thanks. Yeah, you talked a lot about the relationship with private firms and the government. I wonder if you could speculate a little bit more about going forward about your view of SOEs and the role of sort of how she might see these as a new kind of alliance or sort of group of capitalists, even though they're already under the control of the state. You talked about taking state shares in private companies, but what about the reverse of making SOEs operate more as market company or hybrid companies? Do you see that as a significant shift? And if so, will it exert discipline over this sort of, system in a way that's different than what you've described?
So in the book, it's not a book about SOEs, but I do talk a little bit about SOEs and specifically the corporatization of SOEs in China. And what was really interesting is over the 2000s, right, the SOEs were also publicly listed in China as well as elsewhere, right, and developed these modern forms of corporate governance, right, with boards of directors and, but the interesting thing about that is they're always, 50 plus one share owned by the state. And everybody knows, right, in Leonard Cohen's terms, everybody knows in China, right, who owns Sinopec, and you may own shares in Sinopec, but you don't have minority shareholder protections. You don't have transparency into the corporate governance. You know that the bottom line is going to be political for that company, and you're going to have no, say in how resources are allocated or what it looks like. So the interesting thing is for a couple of different large firms I talked to who also listed and basically operated in the same way. So the book looks a lot at the corporate structure of these firms. And what's really interesting, even firms that look, internationally competitive, like New Hope Agriculture. I seem like I'm aligning firms on the internet, and I'm sorry, but it's in my book and it's well documented. So New Hope Agriculture, right? It's listed, and in fact, it'll be like 23% controlled by its own holding company. But then its other shareholders, if you trace their corporate ownership up, actually it's majority held by other vehicles that are controlled by the same family or the same company, right? And more than once I heard, look, if SOEs are listing and they're doing all this stuff, why can't we, right? And so you have this edifice of a modern financial system without actually minority shareholder protections, without accountability and transparency, which allows, and I think it's very hard if you have one group of companies that are allowed to behave however the state wants them to behave, but you want markets to discipline the rest of the companies, but those corporate governance institutions exist that anyone can manipulate. What I've been doing a lot of research about, and I have a few papers out on this, is the ways in which SOEs are being turned into investment vehicles in China, right? So shareholding companies and state capital allocation companies, and they're taking shares in a bunch of private companies in China. And they're doing that for what I call a dual logic, right? One is that The financial system continues to be difficult, especially for startup capital in China. And, it is imperative for the party state that China develop capabilities in things like AI, quantum computing, and in, semiconductors. That kind of innovation doesn't happen in Sinopec, right? It happens in garages, and men and women in their garages inventing things, right? And so the key is they don't trust VCs and private equity in China to allocate that capital themselves. You have all these documents saying these companies have just been going after consumer-facing things. They just want to sell makeup via e-commerce. In China, what we really need is long-term investment in technology. And so that one logic is that kind of upgrading logic, but the other logic is this monitoring logic that I articulated, which is, the worse the company has done, the more I need a seat at the board to figure out what they're doing so they don't do it again. But can these companies become competitive, right? I mean, my view on a lot of these things in China is that it's not one answer, right? So the amount of resources that have been mobilized for something like Made in China 2025, it's considerable. I mean, 11.6 trillion renminbi, right? I can give you a dozen ways in which the money has been wasted. I found semiconductor companies that have mortgaged ASML machines and absconded to Japan, right? We know some of these stories, right? I found, the China Minsheng Investment Group. So Hao Chen and I have a paper on them, which was China's JP Morgan, had the imprimatur of the state, bankrupt within 3 years because the principals basically mortgaged off all of the pledges that they had for US dollars and then expatriated their capital and self-dealt. It was fascinating, right? The fastest collapse of an investment bank I've ever heard of. And so that kind of thing happens. On the other hand, right, you're going to get AI companies, quantum companies, semiconductor companies that end up doing amazing things. Like look at the electric vehicle market in China. And so it's just not one answer. There's going to be both competition and innovation, and there's going to be fraud and waste at the same time, right? And it's interesting, just briefly, for the US perspective, right? We're doing industrial policy now, in case no one's heard, right? We have it too. And everyone's so concerned, like in the US, right? If there's one tax dollar misspent, there's some expose on how this battery, now the electric school bus companies, you probably know this, John, have all gone Solyndra, right? Have all gone belly up. And then it's this big thing of the government wasted money on this. In China, that's part of the equation. They expect some waste. And, maybe we should too. I mean, not fraud and malfeasance, that's never good, right? But not all investments work out, right? And it doesn't have to be the cause of some public scandal, right? If we're Larry says, government is not a VC, and it's not in China, right? And maybe not in the United States, but it's a different model. So the presence of waste and fraud and capacious innovation are both there. Okay.
Hi, I'm Mike Enright, currently at Northeastern. When you talk about moving sort of from one form to another, it almost seems that you're trying to describe steady state to steady state. Again, what I didn't hear in here is that, before 1980, there was no mechanism to administer a private economy. Until 1990, there was no private property. To what extent, whether authoritarian or not, are we seeing China basically struggling with the same thing that the US did 150 years ago, Britain did 200 years ago, which is figuring out how to administer and regulate a private sector that it doesn't 100% control?
My British and American history aren't as good as my Asian history, so I can't speak to that. It's something I hear a lot. And in fact, in Shanghai in 2017, I had all these meetings with CSRC regulators who were saying, the stock market crisis doesn't mean we're doing a bad job. It's the same thing you guys experienced. You just don't know how to do it, right? We're learning how to do it. We don't know how to do it. The conclusion of the book, though, really focuses on the difference in regime, right? And the argument that I make in the book, and why it's called Precarious Ties, right, is that I think there's something incredibly significant to the fundamental vulnerability of entrepreneurs in places like China and in Indonesia, certain kinds of entrepreneurs, that makes them unlikely to behave economically in ways that are ultimately always good, right? So, for example, if you go belly up in the United States, right, as a business, typically, you declare bankruptcy, you move on with your life, you don't end up in prison, right, or worse, right? Whereas in China, you go bankrupt, or rather, what happened? Your company Your company is insolvent, the government bails you out, but you get arrested, right? Or executed or worse. And so that fundamental vulnerability, which is really linked to civil and political rights rather than the technologies of regulation and governance, are important, is what I argue. So, a lot of the work, and I spent, the work on Indonesia is all, a lot of it is based on archival research in Lamont, where we had, a bunch of advisors and the Berkeley Mafia and even Harvard advisors telling Indonesian financial regulators what to do, right? And it was basically, you can build a super efficient financial market, even with an authoritarian regime in Indonesia, as long as you get the technocracy right. You get the technical regulations right, the transparency, declarations and this and that. But when you have a private sector that fundamentally has short time horizons and doesn't trust that it won't be out of jail just because it makes bad business decisions or because it says something politically that is unfortunate, I think it's really, really hard. And so, the last part, like the last page of the book is basically like, it seems weird to conclude a book that's basically about fraud with a cry for political rights for capitalists, right? But it's not that profound of an observation, right? When people feel politically secure, they're more likely to have long time horizons, which is ultimately what you did have in the United States for a long period of time, and what I think China is missing. But I could learn from you on the history of.
All right, last question, then we'll raffle
Okay.
off some books. But I'm going to take the prerogative. By the way, I'm John Haig. I co-direct most of our Romani Center for Business and Government. I should have introduced myself at the start, probably. But I'm trying to connect the dots between a couple of things you said. One is that state business relations and authoritarian regimes are inherently unstable. And then you talked about kind of, you either have stagnation or some combination of stagnation and the mutual endangerment with drama, right? And then you said that stagnation is an existential threat to the regime. And I don't know what that implies about, like, what does the regime do in that kind of context?
Right.
I don't see an out, if
Yeah.
you will. And therefore I don't quite know what the future looks like or how to predict that.
It's a great question. It links back to part of Mike's question that I didn't really answer, which is it steady state? So I think both of these are unstable equilibria, right? So mutual alignment seems fine, except for you get these stuck privileged players and then the state's trying to outmaneuver them, right? And so you get this kind of economic stagnation and they're unable. So what do they typically do? So Malaysia did it, Indonesia did it, China did it. So you get mutual alignment, you get some sort of stagnation, and what do? They say, we need more innovation, we need more stuff, we need more efficient allocation of resources, let's liberalize the financial sector. And so they liberalize the financial sector, which, in Malaysia, it doesn't go very well, but the regime survives, right? Because in the Asian financial crisis, all of the elite businesses in Malaysia come to Mahathir begging for help, whereas all the ones in Indonesia run to Singapore begging for help. And there's the difference, right? And I think that difference is at play in China in some ways as well. And then mutual endangerment is unstable because the incentives of both sides are to constantly hedge and outmaneuver the other. So some basic game theory will tell you it's a constant effort at defection, right? Even if you think, I'm holding this guy hostage, you're still like, well, I don't know what'll happen to him, so I'm parking some money in a football club in Europe or in the Waldorf Astoria, right? Which is what HNA did. So, or Anbang, right, did own the Waldorf Astoria. So in any case, that's also an unstable equilibria. And so, I think what I think China will do, and what I think it's basically done, is cycle back and forth between mutual alignment and mutual endangerment in ways, right? In these cycles of accommodation and reprisal. And, these are ideal type categories. They're meant to innovate in how we think conceptually about co-optation and cronyism. I don't like these terms because I think they're insufficiently descriptive, right? Just, that's a crony regime. That tells you nothing about whether it's efficient, whether it's stable, whether, people trust one another. And so I want more granularity to that. They're imperfect in many ways. But I am not optimistic about China being able to develop a financial system that really has transparency and accountability and allocates resources efficiently, especially if it doesn't open that financial system to global participation, which is, it's danced with doing that, but it's unwilling to tolerate the consequences of it. So that's it.
Terrific. Thank you.
Thank you. Thanks for coming.